is interesting here. Receipts at restaurants, bars increased, but at a slower pace. So you're also seeing an inflection point in restaurants and bar spending at the same time as you're seeing this pullback in basically people buying stuff. Now, this is actually something that the Federal Reserve predicted. It wasn't necessarily just Kathy Wood who mentioned people would spend a lot and then spend less. Jerome Powell has been saying this for well over a year. Jerome Powell has suggested that, look, when we have the reopening at first, we're likely to have this surge of spending, but that's likely to start waning. And based on just this headline here, this receipts at restaurants, bars increased, but at a slower pace, looks like we're starting to see that inflection point start bending to the downside, or potentially towards the downside, at least flatten out. Let's take a look at some more detail here. U.S. retail sales fell in July by more than forecast. And this, by the way, is something that we also saw in China, is that retail sales are coming in softer than expected, and the slowdown is coming at a faster rate, reflecting a steady shift in spending towards services. Remember the differences between goods and services. We got gas in our economy, right? Goods, stuff, services, or like having people wash your car or come clean your house, or, what real estate agent services, right? Anyway, and indicating consumers may be growing more price conscious as inflation picks up. This right here is actually probably the most beautiful thing that they could have said in this particular article. The capacity for businesses to raise prices is limited by the people's willingness to pay. So as soon as NVIDIA goes, we're just going to keep cranking up, the 390-50 chip or whatever, then at some point consumers are like, no, I ain't paying that for a card, right? And that's good. You need that elasticity of demand essentially to be low, which means people's willingness to pay more as price goes up goes down very quickly. You want that to happen to actually help keep sort of the reins on inflation. See, there can't be inflation if we're all like, yeah, no, we're not paying more. If we all protested, prices would actually come down. We could literally have J-Pow printing money, and we're all like, yeah, no, I'm not paying that, and prices will come down. It's great. Obviously, coordinating the market has been tried, and generally that's called communism, and that doesn't work too well. But anyway, this is a good sign, clearly here, that as a whole, the uncoordinated market, the free market, is saying, yeah, no, things getting too expensive. The value of overall retail purchases dropped 1.1% last month, following an upward revised 0.7% increase in June. That's fine. Median survey called for a 0.3% decrease, excluding autos. Sales decreased 0.4%. So a little bit more of a cutback here in July. Take a look at this, though. Folks, this chart should be absolutely zero surprise. Can you guess what the big bars are for? Stimulus 1, Stimulus 2, Stimulus 3. I kid you not. It's $1,200. It's the $600, and it's the $1,400. Remember, when I went to Prada, what did they tell us at Prada? They told us their best customers were literally people on unemployment or stimulus check recipients. And guess what expires in 2 weeks? Unemployment. Total receipts trailed estimates by, at least the federal unemployment boost, right? The state unemployment. Well, then again, that'll come up for expiration too. You can't be on that forever either. Total receipts trailed estimates by a wide margin as declines in motor vehicle and e-commerce sales weighed on the figure. This, by the way, this e-commerce sale plummet here is one of the problems. I don't know why this would be blurred. Hold on a second. We will fix that. But anyway, one of the problems that we ended up having with Pinterest, for example, just as another comparison, is we ended up with a substantial sort of slowing in the amount of time and money that folks were spending on websites like Pinterest or Etsy or Amazon. It's kind of interesting and also unfortunate, since those are some of my favorites. So let's see what else we have here. We've got the emergence of the Delta variant poses a risk to economic activity. Also true, potentially a reason that we might see prices stopping in their crazy run up. And this is something we've talked about on the channel before, that Delta could actually bring in a period of deflation. Higher prices for things like groceries, meals out, personal care, and apparel risk limiting discretionary spending in coming months. This is true, limiting that discretionary spending while at the same time having Delta. Yeah, those are deflationary forces. A report last week from the University of Michigan showed conditions deteriorated to the lowest level since April of last year as inflation remained. This was the confidence index. So we're seeing confidence inflect down. People's willingness to spend rotating down. Stock futures going down, right? Results from Home Depot showed weaker than expected results and signaled a cooling in the home improvement boom. We're seeing car prices start rotating down, especially as they're affected by supply chain shortages. Folks, if you're wondering, why is the market slowing down? Why is the market turning red? Well, in very much part, it's because people are saying enough is enough. We spend ourselves to oblivion. Now we've got Delta concerns. It's time to chillax on the spending a little bit. We're not willing to pay high prices forever. And so we're actually going to lid inflation by not letting these prices run away because we're voting with our wallets and we're not going to pay for it anymore. See, this here could potentially buoy lower spending. Let's see here. Investors bet that corporate spending and buybacks will support stocks. I don't know about that. Let's see. Investors are betting that cash-rich companies will will increase spending on everything from factories to share buybacks. A combination many believe will boost stocks in the coming months. I mean, it's possible. You even had Enphase do a bunch of buybacks in May, but that was also when their price was in the hole. I mean, you literally had a board that bought the dip there. I mean, that was impressive in my opinion. That I very much liked. Yeah, that was good. Hoard of cash held by U.S. companies is a key comfort for U.S. investors, despite worries of the spread of Delta that could dent the recovery. Yeah, no kidding. It's true. There's a lot of cash. I mean, look at this. Look at the amount of cash at companies. Oh my gosh, it just skyrocketed after the pandemic. Well, during the pandemic, I should say. That's an interesting thing to keep in mind. I mean, look, yeah, what would you rather have? A cash-rich company or a cash-poor company right now? I think that's a no-brainer, so no real surprise there. So, very interesting. Keep an eye on this stopping of consumer spending, especially with Delta fears.